Good morning and welcome to the Lynas Corporation Investor Briefing for the June quarter 2019. Joining us today are the CEO, Amanda Lacaze, General Counsel and Company Secretary, Andrew Arnold, and Chief Financial Officer, Gardin Sturzenegger. I'll now hand over to Amanda Lacaze. Go ahead, Amanda.
Good morning, all. It is a beautiful day in Sydney today, and I'm lucky enough to be sitting in an office where I can see the sparkling harbour. I think in Malaysia it's hot because it's one day of the year. I thank you again for joining us this morning. Quarterly results, the quarterly activities report. It was an unremarkable quarter for us operationally. Not unremarkable in general terms, but certainly unremarkable operationally. However, what was remarkable and really excellent for us as a business, it was the first time ever that we could make choices on our production and sales activities. Previously, for the last 5 years, as we've sort of been working to ramp up the business and to build some cash reserves, effectively we've had to max out production no matter what every quarter and max out sales no matter what the price was. And I still have the scars on my back from the year that we had to sell at $29 a kilo. I think we had to do that in early August, and within a month the price had gone up by $4 or $5 a kilo, which would have been just nice for us to have. But we are now in a position where we can make choices. And so in the quarter which has just passed, we did make some choices. As we've covered in the report, the market, despite the trade tensions and the attention in the media, is quite soft. This is particularly off the economic situation in China. So demand in China is soft. There's been, the automotive market there is not growing, which is, sort of a really big driver. There's a real concern there about the effect of the trade war, and sort of the level of optimism in the market is not where it has been previously. The outcome of this is that the price has also been very soft. So you can see this in the table that we have, where we have the price table. We started the quarter in very very negative territory at just under $35 a kilo was the published price. Now, it spiked up at the end of June, but really only sort of pretty briefly, and it started to settle back again now in July. So as we've said very clearly in the activities report, we made some choices as far as production and sales were concerned. For us, the really great news is that whilst the demand in China is pretty soft and the price is also, not all that encouraging, demand in our key outside China customers is very strong and continues to grow. So in this quarter that's just passed, we only sold to our key strategic customers. And that means that there was very little of our product that actually went into China, to Chinese customers. I mean, there's some via our end user contracts, which ended up back in the hands of Chinese magnet makers. But basically, we stuck to our key strategic customers, and as we seek to grow our outside China business, of course, that would not surprise you that most of those were outside China. Because we were making to stock, we also did not max out production, and we don't see any reason to be, sort of consuming costs on when we're making to stock. And once again, it's just, a pleasure to be in a situation where we can make some choices, as opposed to just really having to, max out everything that we do. The other thing, though, which I think was a bit more remarkable, is that the SEG price, particularly off the back of dysprosium and terbium pricing, firmed, and that was certainly very good for our business. So if the operating result in terms of throughput was not particularly remarkable, what was remarkable was some of our achievements in terms of safety and environment. And, we're very, very proud. It was actually just out of the quarter. It was in early July, with the fact that we've just logged 1 full year LTI free in Malaysia, and that's been as a result of a huge amount of focus and effort from everybody involved in our Malaysian operations. It's one of those things, it's never done, and so we're superstitious enough not to want to make too big a fuss out of it, but at the same time, it is certainly an achievement that we would like to recognise. As well as that, in Malaysia, we've mentioned before, the AELB audit, which is part of our licensing process, was completed, and we were found to be very satisfactory. And during the quarter, also, the DOE, the Department of Environment, had their third-party audit of our site, and that was really terrific because we got 21 best practices, 1 minor observation, and 0 non-conformances. During the quarter, I don't need to labour it, but of course we announced the Lynas 2025 plan. We're very excited about the development of the cracking facility in Western Australia. We're well engaged with local authorities and the state government as we work through exactly what that's going to look like as we make our site selections and as we work through the permitting process. We're likewise very excited about the US expansion that we announced, and we're working very productively in that area. We've virtually completed, sort of the design of what we want to do, and as we've said, once we've got this really finalised, then we will finalise the elements of the joint venture and we'll make relevant announcements. And then, of course, the other significantly positive thing during the quarter was the rescheduling of our JARE loan facility. The significant rescheduling means that we are able to accumulate cash from operations over the next couple of years, which will pay for the capital requirements in our Lynas 2025 plan. So we were pretty busy during the quarter, even though I would say that in a lot of ways it was unremarkable on an operational basis. And then, of course, the Malaysian regulatory situation. I know if I don't say anything, you're going to ask the questions. You probably ask the questions anyway. So we continue to be very productively engaged during the quarter. So it's on the 30th of May, the Malaysian Prime Minister announced that the licence would be renewed. Now, that has not at this stage converted into a formal renewal of the licence. And to just put that into perspective, the earliest we have ever had formal renewal of our licence was a couple of weeks before the renewal date. There are certain processes, there are dates that we submit certain pieces of information or otherwise. And so in the last couple of weeks, the Deputy Minister for Mestec said that there would be a final decision in the middle of August. So please don't be sitting being concerned that we haven't had this done yet. This is not unusual. We continue to engage very productively across a number of different areas in Malaysia. A couple of weeks ago, there was an excellent conference held in KL, Rare Earths Roundtable. There's a great deal of enthusiasm within the Malaysian government for the sort of growth that can be achieved by developing further downstream industries in the rare earth sector in Malaysia. And I think, the Prime Minister has been pretty clear about Malaysia is open for business. He wants to see significant growth in terms of industrial activity, because this is one of the things that really makes a difference to the economic health of not just the country, but also of, the population. And over the last probably 3 or 4 years, as this is sort of conversation I've had with a number of people in government, there's been sort of a switch into things like property and or finance, but this doesn't have the same, doesn't create the same engine room as industrial activity does. And so there's a great deal of enthusiasm for this, and at the roundtable event there was a number of very eminent Malaysians who spoke to the value that this could create. So we don't have a licence renewal. It's the 29th of July. We would never expect to have been given a specific outcome on that by this stage anyway, but we continue to be well engaged with the government, and we certainly take comfort from the Prime Minister's statements. So I think that that's probably all that I want to say, and I'm happy to take questions.
Your first question comes from the line of Dylan Kelly from Ord Minnett. Please go ahead.
Yes, good morning, Amanda. 2 questions from me. First one, just want to understand what's happening with the plant performance around SX5. Can you just walk us through the performance around the different NdPr trains and what's happened and how that relates to possibly your strategy on making choices? I'll just pause on that one if you can take us through that first.
So SX5 trains are, working just fine. The optimization of the separated PR and ND continues, but that's really related to multiple grades in terms of production. So the circuits, the SX5 circuits, have not caused us any problems or been a bottleneck in any way in the operation.
Okay, so can you just walk us through the decision to maintain the run rate very similar to the March quarter? Just trying to understand the different moving parts. Does it in fact come back to your questions or your point around making choices about not increasing supply into a market that's quite weak, or is this more around optimizing the feed of new Duncan material? Can you just give us more colour around the logic there?
So there's a whole number of different factors all interacting, but at the heart of it, as you can see, we finished the quarter with 323 tonnes of NdPr products, whether it's NdPr or separated ND and PR in inventory. We didn't feel any pressing need for us to be building more inventory than that. And so, we're certainly not going to be pushing a whole lot harder. On the other hand, yes, we've had some new ore blends coming through from Mount Weld, and that's always, it's not a challenge in SX. it always presents a few challenges for our cracking and leaching staff. But, primarily, I mean, there's no reason for us to be sitting on 600 tonnes of product and to have generated the costs that would be associated with that.
Okay, fair enough. So just looking over the next few quarters in terms of your run rate, should we be thinking about 600 tonnes per month as the norm, or simply reverting back to where you currently are?
So I think, Dylan, what we've always said is that we actually aim to match our demand, our production to demand. I know that this is not always fashionable in mining chemical production. It is certainly fashionable in consumer goods that you do a forecast of demand and you match what you produce to demand in the market. So what we see is that we have increasing demand in our key customers. So therefore, we would expect to be able to be continuing to ramp up our production rates to match customer demand. But there's no need for us to produce, sort of over and above what demand is. Otherwise, we end up selling it at low prices that somebody else actually makes the margin further down the track when the price goes up, or we simply have it sitting in our warehouse. And, there's no, given that we can produce, that there's no great reason for us to be holding a lot more inventory than we have at present.
Okay, fair enough. And do you mind if I just come back to your point about Duncan and the potential uplift you might get from that when you start talking about this the joint venture in Texas? What are the key problems or advantages over that blend coming in through Mount Weld and in through Malaysia over the next 6 months? Is production likely to be impacted by that, or in terms of some troubles in terms of first handling it, and on the other side, the potential uplift in the SEG or SEG concentrate coming through with such high grade heavies?
Yeah, so we don't think, but every time there is a change in ore, we have to adjust to that, and sometimes we can do that quickly and sometimes it takes a bit longer. I think we're getting better at it each time that we do it, but we're dealing with a natural product, and so variations in it certainly present some challenges. But our assessment on the sort of the most significant influences in terms of the ore is that there are other physical elements to the ore which are more challenging. For example, as we've gone into mining campaign 3, we've got a lot of crandallite in the ore, and that's a bit more of a challenge. But the bench testing for Duncan says that it should float and it should behave the same way. In fact, the fact that it's called Duncan is a bit of an anomaly because we really just see it as part of the same ore body. But all of our bench scale testing says that it should perform the same way as the CLD ore. I think that it's going to be other elements of the mining campaign 3 ore which is going to be more challenging for us than the fact that we've got an ore grade which is more enriched with the heavies, and it's still got about the same amount of NdPr. It has less cerium, which is sort of a good thing for everyone. In terms of effect on financial performance, that's one of the reasons why we've put into the quarterly activities report what we're seeing in terms of pricing for these heavies, and most certainly the requirement for particularly Dy and Tb in electric motors operating at temperature is significant, and even today I would say that based upon sort of customer inquiry, we have no problems whatsoever with selling more than 100% of what we will be producing.
Okay, that's great colour. Thanks, Amanda.
Thanks.
Your next question comes from the line of Kathy Moises from Patterson's. Please go ahead.
Good morning, Amanda. Well, Dylan sort of got most of the questions out good and early, but I had one more question on that 1,500 number. Is there any sort of the background with the still waiting on the approvals for the next expansion? Is that also sort of weighing on your mind when you're keeping it down to those levels? And looking at those levels staying down and the fact that the NdPr price has softened recently, what's your line on the funding? Because if the prices stay at these sort of levels, the funding looks like it's going to have a gap.
I don't think the funding's going to have a gap based upon our forecasts over the next couple of years. We're sitting at close to 100 million right now. If you look at operating cash flow this year, you've got to take out the effect of really the substantive Lynas next costs over the last 12 months. You would see, even at pricing, and our expectation is that the pricing won't, on average across the year, probably won't be any worse than it's been in the year just past. There's not been anything remarkable or exciting about the pricing in the last year, apart from about 2 weeks at the end of June. So based on our forecast, we're not seeing a gap. We're seeing that this will be fine. And then the point around the processing limits, I take your question on that. It's relevant. However, we have, as part of the approvals for NUF management, we've completed an EIA. We expect as we move through the licence renewal process that all other approvals will move back onto a more normalised basis.
Just getting back to the gap, I mean, I too am forecasting some nice rises over the next couple of years, Amanda, but is there a stopgap which you could fall back on if there was a delay in that nice pricing reaction, which we all do expect to happen? Or would you just delay the expansion to meet cash flow, or would you look at alternative funding if that was the case?
Oh, Kathy, you know what? Everyone wants to lend me money at present. I think I'm the prettiest girl in town. I think someone actually wrote that up on stage, prettiest girl at the dance in terms of rare earth. I think that debt and or equity markets are probably open to us. My own view is that if we can self-fund it off, a very favourable agreement with JARE, then that is better for shareholders. But I guess, we're not sitting here being concerned about whether we will be able to fund this activity.
Fantastic. Thanks, Amanda.
Thanks, Kathy.
Your next question comes from the line of Daniel Morgan from UBS. Please go ahead.
Hi, Amanda. A few other questions. Just firstly, one, is water supply and consistency still an issue for operations? Thank you.
Hi, Daniel. I'm glad that you're staying interested in us. Is water an issue? I'm going to answer because I think your question is about Malaysia. So, no, I think we put into this a picture of our third water storage pond. And so, there's always we now have more buffer. I have to say that there's still days that I turn the tap on at home and the water doesn't come out, but generally speaking, this is not an issue. This has not been an issue, and with the additional buffer with the third process water pond, we would need to have a mains outage for a pretty extended period of time before we had a further problem. However, if I'm not too cute and I sort of answer generally, I mean, in WA, of course, water is always a challenge. It will be part of our decision process when it comes to location for the new cracking facility will be access to water. And certainly the work which has been done there on water has been really significant, but nonetheless we still work very hard to conserve our water there so that we can get closer and closer and closer to being in balance.
Okay, thank you. And capital expenses over the next 12 months, it seems like Lynas Next has come to a close and been tied in. Just wondering maybe if there's any study costs of the expansion that you're going to start to put through, or is there any capital spending that's significant on the US strategy as well?
I hope that we start spending some capital this year. There won't be. Yes, there will be some study costs, but they're not going to be significant because the way that we will go about the development and planning of this. So we're not going to get an external construction firm that's going to cost us $20 million to do a study, but there will be some study costs in both locations, and hopefully, because the US task is a relatively smaller task, we will start to incur some capital costs during this financial year. I don't think we'll have significant capital costs in WA this financial year, and if it is, it will be, sort of back-ended.
Okay, and the upcoming regulatory decision with the Malaysian cabinet, how is this? What is your expectation of how would this be communicated to the market? Would you receive notification and then you would announce it? Would it be something that we'd see in the Malaysian press on being announced by the government? How would you expect notification to be received by yourself in the market?
Yes, that's an interesting question, Danielle. We will update the market on any development. I would expect that, as with most of these things, we will receive notification in a formal sense via the AELB, which is responsible for regulating the licence. However, given the profile of this issue in Malaysia, I would also probably expect that there will be something said publicly by the government, and I couldn't even hazard a guess as to, sort of timing or scheduling of those two different activities, whether they'll be concurrent or whether one will precede the other. But I would expect that the market will know about it in short order once the decision's made.
Okay, thank you. And maybe my last one for now, just on pricing. You seem to get a little bit better than benchmark pricing, at least on my read-through, in the quarter. Just wondering, what were the drivers of that? Is that some of the heavy product that you're seeing? The price is lifted there, and are you getting the benefits of that, or is it you get better pricing from your Japanese customers, and just trying to understand. I
All
just
of
think
the
the price. Yes.
Daniel, all of the above. So Pol's KPIs, number one is to sell, to sell everything. But number two is to continuously increase the percentage of our sales outside of China. So, for example, in the last quarter, as I said, most of our material was sold out. By far, most of our material was sold outside of China. When I say that, I mean not just NdPr, but I also mean lanthanum. I also mean, cerium. So we were making most of our sales outside of China, and so Pol's third KPI is to achieve a premium versus the benchmark price. So how does he go about doing that? Some of it is about the contracting strategies that we have. Some of it is about, the fact that the market particularly in Japan is slightly at a premium to the market in China. Some of it is about the quality of the material, so selling more specialised blends, even the selling more of the PR and the ND separated gives us a slight uplift in price. So there's a whole series of strategies that we have to achieve an outcome where we are actually getting a price premium over and above the benchmark price. And we will continue with those strategies. And sorry, of course, Daniel, yes, the improving price on the SEG material also was beneficial.
Thank you very much.
Thanks, Daniel.
Your next question comes from the line of Angus McGough from CLSA. Please go ahead.
Good morning, Amanda. Hope you're well. Just want to touch on, I was up in China last week the week before last, meeting with a bunch of people, talking about the market. The consistent feedback we got is that the light rare earths market is pretty well supplied at the moment. As a result, near-term outlook for NdPr is stable. Potentially, if strategic buying kicks in, then that's maybe where we see the spike come from. But conversely, the market dynamic with respect to heavies was very optimistic with regards to the availability of current supply being very tight, and obviously demand profile looking forward being hard to identify where the incremental supply comes from. And that's obviously where you guys come in with your situation in America. So I just want to get a little bit more detail from you with respect to Blue Line, just in terms of how should we be thinking about what your ultimate goal is there with respect to supplying the heavy rare earths market, and just a little bit more colour on, your sourcing for the feedstock. I think the market's a little bit confused by, and I know you've outlined that, but just a little bit more colour in terms of how we should think about that opportunity over the near term, and just anything we can do to help put that opportunity in perspective.
Okay, so the US we think is a really excellent opportunity for our business. There's been no separation capability in the US now for over a decade, and whether it's lights or whether it's heavies, and the result is that the US market downstream is exposed, and there's been multiple column inches dedicated to that. So we see the US as a great opportunity, not just for heavies, but also for light in time. So the heavies, developing the capability to separate our own heavy rare earth material, our own SEG, has been on our agenda since when we actually were looking at sort of our strategic path when we came up with the Lynas Next program. So separating heavies has always been something that we've been looking at as part of our industrial footprint. And so why do it in the US? Well, it gives us a sort of a starting footprint in that area. There is no question that there's a lot of appetite in the US for this type of thing, and particularly the US government is very keen to restart rare earths, a capable rare earth supply chain in the US. And so this is a good opportunity for us. It's something that we don't do right now. Basically, as with many things, we could have done it. We could have done it in Malaysia. We could say, well, let's wait until we've got cracking in WA and we'll do it in WA, or we could choose to do it as we have chosen to do in the US. And so what we will do is that we will simply ship our SEG from our Malaysian plant to our US plant and separate there. In terms of generally, sort of supply for any of our plants, we keep a watching brief on all of the various resources as they are characterised by their owners to understand whether there's any value in looking for alternate feedstock. At this stage, we haven't identified anything where we would say, well, gosh, we'd be better using that feed rather than continuing to develop our own. But that doesn't mean to say that that won't be the case at some stage, and there are certainly some interesting South American heavy rare earth deposits. But at this time, we will be constructing our plant with the intention that it will be separating our own SEG. Does that answer your question, Angus?
I think it does. Yeah, I think it does. I think, I guess the point I was just trying to impress on was, I mean, the obvious thing from being in China is, just the lack of availability of heavies. And, I mean, it's obviously the one thing that the world certainly needs more of. So it's just very interesting to see what you guys are doing there.
We have tried, to sort of make that clear in this report that we see that where we've still got this sort of volatility and a bit of spikiness around NdPr, we've yet to see what we would say, and Kathy was referring before to the sustained upward movement on the NdPr price, but we do expect that will happen. Whereas we believe that the pricing, the positive pricing that we're seeing at present is on the heavies is sustainable, and we certainly have a great deal of interest from the market and from our customers in the output that will come from that plant.
Yeah, great. No, thanks very much. That's great.
Thanks, Angus.
Your next question comes from the line of Andrew White from Curran & Co. Please go ahead.
Hi, Amanda. Just a quick question. Can you give a bit of clarity on when the licence is renewed? Do you expect that the issue of the waste disposal conditions to be made fully transparent at the time of that announcement on the licence renewal?
Yeah, I would think so, Andrew.
Okay. So it won't be a separate decision. It'll all be bundled into one, you would say?
That would be our expectation, that the licence renewal will be explicit. Our licence has always been explicit on management of the residues. And actually, I doubt that there's no other option. There's three options. You reuse it, you put it in a PDF. Those are the two realistic options. And so, I would expect that the licence renewal will accommodate both of those opportunities.
Sure. Okay. And I just saw the open letter that came out from your company last couple of days, maybe yesterday. I was just wondering whether you had any predetermined rules in mind on what sort of misinformation you'll pursue in the legal system. I saw, for example, there's a list in the table in that letter. So have you got sort of some things in mind as to what you'll pursue and what you'll let slide?
I'll let Andrew sort of add to this as well, but frankly, the situation in Malaysia, I think as everybody knows, there's a small group of activists who have had countless opportunities. Well, they're not countless, but they've had at least 8 opportunities at last count to present coherent reasons for their opposition to Lynas. And on 8 opportunities, that is 2 IAEA reviews, Parliamentary Select Committee, and then most recently the Pakistan Harapan Executive Review Committee, as well as 4 legal cases, their reasons for opposition to Lynas have been found to be wanting. Notwithstanding this, they continue to make assertions, and just in the last few weeks, their assertions have been escalated. I think this is because of the Prime Minister's definitive comments, and so they've been making more and more outrageous and egregious comments. And so our experience is that if we let this go through to the keeper, that they continue to escalate. And really, the open letter was a combination of making it clear that we will not put up with this. And there's a lot of people who say, well, if they really are telling lies, why don't you sue them? I mean, I have a whole lot better things to do than spend my time in court. But you get to that stage where you really have to say, enough is enough. And the second thing is that if they're allowed to stand, people in Malaysia will think, oh, well, there might be some truth in this. So that's the reason for the letter. So it's not that there are, sort of specific, I mean, these are just some of the most recent and most egregious claims that they have made. But we don't have a sort of specific, sort of hit list of we will sue on this basis or we won't sue on that basis. I have no desire to actually sue. I just have a desire to make clear that these assertions are wrong in fact and wrong in intent. But Andrew, I don't know if you wanted to add anything to that.
Well, Andrew White, thanks very much for the question. I must say I can't fault Amanda's legal skills, so I don't have anything to add to that answer. Thank you.
That was brilliant. No problem. Thanks for that. And just on, I guess, a little bit further clarity on sales of NdPr through the month, just wondering to what extent you're able to capitalise on those high prices, and because just looking at the pricing, obviously it would seem first couple of months in that quarter, prices were quite low, and then obviously Mr. Xi visited that rare earth plant in China, and things started to go a little bit more interesting after that, and prices went up. Is there anything you can tell us on the extent you were able to capitalise on those high prices at the end of the quarter, towards the end of the quarter?
Not a lot, Andrew. As in, we did not get a huge amount of benefit. You sort of can't have your cake and eat it too, to the extent that you either say that you're going to work with strategic partners and work on, sort of contracts that give sort of mutual assurance, or you say, well, I'm just going to sell a whole lot of stuff at spot and hope for the best. So we get some benefit from it, not that you would have seen in this quarter's result. There will be a bit because we have, with some customers, price formula, which will actually see us get the benefit this month from pricing that pricing from last month. But really, it was such a short spike. The really big spike was really, sort of over and done with within a couple of weeks. No significant upside in terms of the results.
Excellent. Okay, thanks very much for that.
Thanks, Andrew.
Your next question comes from the line from Matthew Chen from Foster Stockbrokers. Please go ahead.
Hi, Amanda. How are you?
Good, thanks, Matt. How are you?
Yeah, not too bad. I just wanted to dig a bit further on the Blue Line JV. So I just wanted to know, I think sort of winding back a couple of months when you sort of first announced, Grant and Cam are saying we haven't sort of made a decision on when the heavies drop out, whether they drop out of the proposed expansion in 2025, or whether that comes out now with the Duncan extension or the CLD, whatever you want to call it. Just want to clarify, I mean, there's sort of no dysprosium current separating capacity at Malaysia. There's no plans for that to be done there, and it's all going to be done with Blue Line. Can you also tell me a little bit more about where that sort of study's up to at the moment? Because I think that's probably progressed from 2 months ago. There are people on the ground there. Have you got a sort of sense of time how long that will take, and when you'll update? Because that'd be sort of very interesting to know. I figure you take a longer term view on the dysprosium rather than sort of trying to take advantage of the current price spike. But any sort of clarification and further colour would be appreciated. Thanks.
Okay, thanks, Matt. So just going back to your first question, even with the enriched material, I mean, the heavy rare earth separation circuits are not they're not high volume circuits, so we certainly would not be considering putting in a facility, more than one facility. So yes, we will do our heavy separation in the US. As we move through our thinking on our WA operations, one of the decision points there is, do we crack, or do we crack and do upstream SX in WA? If we do upstream SX, that's where the SEG is produced, so we would be exporting from WA to the US for further processing. If all we do is crack, then we would continue to have upstream processing in Malaysia, upstream SX, in Malaysia, in which case the SEG would come from Malaysia to the US operation. In terms of where we're at, the reason why we've decided to do this via the joint venture with Blue Line is that Blue Line have a site. Any time that you can build, brownfields as opposed to greenfields is very attractive. So during the quarter, I actually went to the US. I visited the site. I met with some of the local council in particular and other regulators. But the fact that we're doing it as a JV means that we do have on the ground our partner, John Blumenthal, who owns Blue Line, who has been a customer and a partner and supply chain with us for some time. He is an American. He does live in Texas. He is engaged with the local politicians and the local senators. And so, really doing this with a local partner gives us a lot of benefit in terms of that engagement and being able to continue to move things forward. We have a very small, internal team who is working on design, and then that will develop into the engineering plan. They are well progressed, and they've spent quite some time actually at the location in Hondo, which is just near San Antonio. We understand where on the site we're going to be looking to put this, and what of the existing equipment we'll be able to use, and what we'll need to build, and all of those sorts of things. So I would expect that by the end of this calendar year that we will be providing the market with a lot more detail on this, but work is progressing very positively at this time.
That's great, Amanda. Thanks.
Thanks.
Your next question comes from the line of Daniel Morgan from UBS. Please go ahead.
Hi, Amanda. I've just got a follow-up question, I guess, on the US. It seems that the US Department of Defense, or the Pentagon, has asked the rare earth industry or miners in the US to describe their development options, and there's potentially talk of various assistance mechanisms that the US government might provide, given that the US is short rare earths, does not have downstream processing. Just wondering how you see this, as whether an opportunity through the Blue Line JV, is this something where you might be involved in that, or is it a threat where there might be some other rare earth aspirants in the US that might attract funding and support and undermine your position as a dominant global producer at the moment? Thank you.
We think it is excellent that the US government and the Department of Defense understands the importance of developing further rare earth supply chain capability. I think that what we saw was in 2011 with the rare earth crisis at that stage, that you had a variety of different responses. The Japanese government chose at that time, and it was the only one out of sort of the various Western markets, chose to fund Lynas, and the outcome is that 6 years on, Japanese industry has security of supply, and Japanese industry in this sector is growing. So the Japanese rare earth processing sector has grown by 60% over the last since 2012, and that directly tracks the growth of Lynas as a supplier. I think that last time around, when there was sort of the rare earth crisis, that the US responded via the WTO, but didn't respond with deliberate strategies to improve operations within the US. I think this time around that realization is very clear within the US government. I think that the understanding that the US government does not want to be relying on any of the unaligned, what they term as the unaligned states, for supply into key either defence or industrial supply chains is very clear. So we see the DoD notification as really positive, and we see it as an opportunity, not a threat. Does that work?
Thank you, Amanda. That's a good answer.
Thank you. Okay, Christian, I think maybe we've pretty much exhausted it, and we're about 3 minutes from the hour. So I think that, maybe I'll just finish by saying thank you, everybody, and I'll look forward to seeing you all again soon.